Gold trading in 2025 is at an all-time high, with prices around $3,000 per ounce. To profit from the market's volatility, traders must use smart strategies. Here's a simple breakdown of key gold trade strategies. 1. Trend following strategy. Buy when gold prices are rising, sell when they are falling. Use moving averages such as 50-day and 200-day to confirm trends. Golden cross equals buy, death cross equals sell. 2. Breakout trading strategy. Look for gold breaking key resistance or support levels. If gold breaks above resistance, it's a buy signal. If gold breaks below support, it's a sell signal. 3. Range trading strategy. Buy at support levels and sell at resistance levels. Use Bollinger Bands and RSI to spot overbought, oversold conditions. 4. News-based trading. Follow economic reports, interest rate decisions, and global events. Inflation and conflicts push gold prices up, while rate hikes can lower prices. 5. Scalping strategy. Focus on small price movements for quick profits. Use 1-minute to 15-minute charts and set tight stop-loss orders. 6. Hedging strategy. Protect against price drops by shorting gold futures or CFDs. Offsets losses in physical gold holdings. And 7. Seasonal and historical trends. For example, gold prices often rise in January and August. Buying in December and selling in March can be profitable. Risk management tips. Use stop-loss orders to limit risks. Avoid over-leveraging to prevent big losses. Diversify portfolio by mixing gold with other assets. Track global events that influence prices. Combine technical and fundamental analysis for better accuracy. Final thoughts for this lesson. Gold trading can be highly profitable with the right strategies. Short-term traders should focus on scalping, breakout, and news-based trading. Long-term investors can benefit from trend following, hedging, and seasonal strategies. Beginners should start with ETFs or gold stocks before jumping into futures. By applying these strategies, you can improve your chances of success in 2025.